Welcome back, traders. Jeff with OptionBoxer.com, continuing our video series on how to trade options. So before we get into it, this is particularly important for this video because we're actually going to start getting into some steps that are kind of the gray area, so to speak. And you need to make sure that if you're going to follow along with this video, that you understand that this is just hypothetical and this is for informational purposes only. So I'm going to read the disclaimer. This example was selected for the demonstration provided below. These trade setups happen all the time and on every chart, but your results may and will vary. You should always do your own due diligence prior to making investment decisions and or consult a registered financial advisor. This page is not a recommendation for you to buy or sell any securities or attempt the information provided. It is for education and entertainment purposes only, or informational purposes only, as it states right here. Basically, you are on your own. Okay, so identifying option trades. So I'm not a fundamental trader. I am a technical trader, and that remains true. I wrote this particular page back in 2016, 2017, and that hasn't changed in the last few years. I do look at some fundamental data, but for the most part, I rely on what the charts show me to take trades. In the pages of this site, you'll notice that most, if not all, are based on technical alerts, and that's just kind of how I trade. Now, if you are a fundamental trader, by all means, use the data that you have and make decisions that way. But so let's take a look at a chart below and attempt to determine what the stock will do next. So I think there's some power in that statement there. So take a look at the chart and attempt to determine what the stock might do next. As an options trader, this is what you're going to be doing a lot. You want to be able to look at a chart and you want to try to identify what it may do next. So let's go ahead and make this a little bit bigger, center it on our screen. And you can see here just the first thing starting out that, you know, we were in a nice bullish uptrend, and then now at this point in this, you can see here the highlighted date is back in 2016, early 2016. So some time has passed, and if, you know, for fun, we may look here in just a second and kind of see how this worked out. But you can see here that price kept coming down to this area, and we can't see what price level this is. But you can see I've identified this level as a major support area. It came there once, failed, twice, failed, 3 times, 4 times, 5 times, give or take. You could just consider that one move down to that support level, but it really and truly is 1, 2, 3, 4, maybe 5 trading days there. So you're looking at 7 touches of the support level, bounced off, and then make it 8, and then it traded higher for a while, and now we're back at this major support level. So when you're looking at a major support level, it's common practice. Now, just because this line I drew on the chart indicates an area where price was supportive in the past, doesn't mean it will continue to be supportive, be a support area in the future. But we have to do our best to make reasonable assumptions about what we think the price will do next. So this is a daily chart of Delta on February 8th, 2016. Can you tell what state this stock is in? Well, it shouldn't be difficult. It's in a downtrend. In fact, it's in a pretty substantial downtrend, as it's wiped out the gains over 1, 2, 3, 4, 5, 6, 7 months in a matter of a month and a half to 2 months. So, you know, all the gains of all those long investors that bought in and rode it all the way up to 52.77 have now watched those gains disappear in a fraction of the time. So, well, it's really only a nightmare if you were long the stock, which I just mentioned, or if you were long the call option. For this example, we're going to assume that no detrimental news or black swan event is affecting their share price. Well, Delta is an airline, so a black swan event for Delta would be if someone died on their aircraft, or if they had an aircraft that crashed, or if they had malfunctions on one of their airplanes. You know, those could be black swan events, in addition to many other scenarios that could drive the price down at a rapid rate. But so for this example, let's assume there's nothing there. So what we can conclude about this stock on February 8th, well, we can tell Delta is in a downtrend. We can also see here the trend lines are sloping from left to right downward, so they're in a downtrend. The stock is nearing a support level, which we talked about, this red line here, which has proven to be a major support area. Bollinger Percent B suggests that the stock is heavily oversold. Well, we didn't talk about Bollinger Percent B, but you can see here these blue bars. And basically, it's very simple to use Bollinger Percent B, which I don't use it as much anymore, but it's a really easy way to see that, you know, the bars are all hovering down here by the lower line, which means they are in oversold territory. Conversely, in this area here, they would be considered overbought, and you can see they got overbought and they fell down. In fact, every time they got overbought, the stock retraced a little bit before moving higher. So Bollinger Percent B can be a powerful tool in your trading tool belt. The moving average is confirmed, which we have already talked about. There's the trend line. Sorry, I just misread this. The trend line here is just a line that I drew on the chart, and for a trend line to be valid, it needs at least 2 touches. So you can see the first one there where my cursor is. Let me make this bigger again. You can see the first one there where it touches, and you can see the second one, third one, fourth touch, and fifth touch. So this is a valid trend because the stock has honored that particular line for at least 2 touches, preferably 3 touches. So just know that if you're going to draw too many trend lines, that for a trend line to be valid, it needs at least 2, preferably 3 touches of the trend line, and it needs to honor it for those 3 or more touches. No signal from the PPS indicator. We won't get into the PPS indicator, but that's just these yellow bars. And if you're curious what the PPS indicator is, I'm sorry, these yellow down arrows or blue up arrows, we won't get into that for this video, but you can come up here to Education Technical Indicators and you can read my article about the PPS study there. And it's an indicator that, in all honesty, helped me a great deal when I was starting out to trade it. You know, you can see here, if I had gotten in long there, I would have been able to ride it up to that point. If I had gotten in short, I could have rode it down as far as this point. You can see it's just a very powerful indicator to indicate kind of short-term trend in the market. You will get chopped around a little bit, and so like I said, be prepared to take a loss. You know, protect your capital, but you know, it is a nice tool for new traders that don't really understand all the nuances or the market mechanics that drive price the way that it does. And so it's just nice to say, okay, well, we got an up arrow, let's get long. We got a down arrow, let's either exit or let's get short. And so this list, of course, isn't exhaustive, but it gives you a nice foundation from which to build. With this information, it's clear there isn't a trading opportunity at this time. And I know you're asking why? Because the stock has already moved lower. For it to be profitable, the move down would need to continue. True, it could continue lower, but maybe even all the way to 0, but we have to make a reasonable decision. Okay, we have to be at least somewhat logical and make rational decisions. To jump in now hoping for more is, in my opinion, gambling. And I am a gambler, but I'm not a good one. So you can see we've already had a large move down. The most ideal trade here would be to see what happens with price at this support line. If it holds and you get a little bit of a volume increase on the rebound, you can feel pretty confident going becoming bullish on this trade. So we'll kind of play this out and see how it happens. Because the stock has moved substantially lower, for it to be profitable, the move would have to continue. Sorry, I just read that. So let's fast forward 8 days. Just 8 days later, you know, we put this stock on a watch list, and we, you know, every night before we go to bed, we log in, we check our watch list and kind of see what's going on. We can see Bollinger Band has rebounded out of the oversold level, and it's now trading near the midline here, which is showing increasing momentum, I guess, and moving to possibly the overbought region, but we still have some upside potential. I'll tell you this now as kind of a side note. Most of your money as a trader isn't going to be made buying a long call option here at the bottom and selling it up here at the top. Most of your money is going to be made buying this area here after the move has already started. You're going to buy in here kind of at the midway point of the move, and you're going to ride the rest of the ride to as close to the top as you can get. But really and truly, if I had gotten long a call option this day and I had this move the next day, I'm probably in and I'm probably out 1 day later. I'm not a day trader. So, if I get a nice move the next day in my favor and I show nice profits immediately, I'm looking to lock those in, almost, as soon as I can. If I was a stock trader, and which I am in a lot of ways, well, not a lot of ways, I do trade stocks, but I trade options more. If I was a stock trader, I would probably set a trailing stop loss after we got another push higher. So you can see I moved up here. Of course, I'm happy with my returns, but my stop loss is going to be down somewhere near where I bought in at. And then when I get a move higher, now I'm going to move my stop price up to, just the next logical area. And then of course you can see 2 days later I would have been stopped out. So I'm just protecting my profits when I put in that stop loss. But that's a conversation for another day. So now that we've kind of identified our trading candidate, and really and truly, I guess I should say one more thing. Find companies or find things that interest you. For me, I like Delta, primarily because I like the way their price moves. But Apple's a big one, the SPY is a big one, the GLD ETF that we looked at. Really and truly, this whole list I've got here, and I'll try to pan through them slowly. So if you want to slow the video down and take note of some of these, pretty much every underlying I have in this list here has a liquid options market, so it's certainly tradable, and that can be something that you use to find trading opportunities. But don't go crazy and find 500 charts and try to analyze them all. Pick 3 to 5 different charts that you like: Delta, SPY, GLD, Apple, Microsoft, and stick to those 5 charts, because every day there's trading opportunities there. And then as you get better as a trader, then you can start reaching out and grabbing different indicators and looking for setups that you like. But if you stick to just if you stick to just a few different charts, you'll get used to how they move. You'll get used to reading the news about them. You'll get used to seeing what drives them, how the indicators respond to their price movements, and you just kind of get a generalized feel for how that market moves. And so that would be another little side note that I'd like to throw in there. Let's see. So going back down here. So now that we've determined a trading candidate, let's start digging in a little deeper. So I'll start by taking a look at the chart for the VIX. The VIX moves opposite of the broad market, so that's kind of important to know. The VIX, when the VIX goes up, and by the broad market I mean the S&P 500 or the SPY. The SPX is just the cash index, but you can use either one. They both track the same thing, the S&P 500. The VIX moves opposite the broad market. So when the VIX moves up, the S&P 500, as you can see here in this, it moved up very quickly and it fell very quickly. So it moves opposite. And so anytime the VIX shoots up, the S&P is usually going down. I guess there are some periods of time where the VIX may go up and the S&P goes up, but almost always they trade opposite one another. Also take a quick look at the S&P. Stocks tend to move in the direction of the broader market. So that's kind of a generalized statement. And it's not as true today as it was when I wrote this. You'll find now that while it's still generally it's an accepted statement, you will see things that have relative strength or relative weakness to the overall market. But generally speaking, I think the number is 2 or 3 out of 4 stocks move with the overall market. So if the S&P moves higher, most other stocks and most other companies move higher with them, and that's just some decent advice. So what can be determined, I'm sorry, not advice, that's just some decent knowledge. What can be determined from the 2 charts above? Let's look at them both individually. The S&P 500, just kind of to highlight this again, trades opposite the VIX, and that is almost always the case. There are probably rare instances when it's not, but for the most part it is. So the VIX has pushed back off of upper resistance. So let's take a look here today. You can see this, kind of this top level here around 30. You can see the VIX is moving down away from it. So it's pushing off that upper resistance area. I didn't draw a line. It appears to be the start of a new downtrend. We can see the moving averages kind of turning over on themselves and looking like they're maybe wanting to head lower. So we can reasonably assume that kind of where this thin gray line is, it may be headed back down into that 19 area. Appears to be start of a new downtrend, which we just talked about. Bollinger %B suggesting neither overbought nor oversold, which you can see here. Kind of this bar right here is hovering near the midline there. So it's neither overbought nor oversold, which is a good thing. The moving averages have reversed, which I mentioned. And the PPS indicator is suggesting a new downtrend. So you can see the arrow there. And you can see last time the arrow did point downward and it did go further down, albeit not by a lot, but we don't need a lot to make profits in the market. You don't need it to move a lot, you just need it to move. And so just know that. So we'll look at the S&P. So we got a strong pushback off of support at the low. So you can see here, it's kind of the same looking chart as Delta there a while ago. You can see we've got a strong pushback now off of this kind of this double bottom here. You can see price stalled out very near the 1800 level right there where my little hand cursor is, and it's pushing back higher. We do still have some room before we see resistance up here around 1950. So looking like a potential candidate here to trade. Bulls appear to be entering. We can kind of take a look. Well, I would normally take a look at volume to see what volume was doing at this point in time, to see if there was heavy volume coming in, just to kind of, add confidence to the bullish move. No significant near-term resistance, which we just mentioned. Bollinger %B, again, kind of trading near that midline, so not overbought or oversold, which is almost perfect if you're using Bollinger %B. The moving averages are reversing course and moving higher. You can see they're bottoming out and starting to turn back to the upside. PPS indicator this day suggesting a new uptrend. So we've got the PPS indicator pointing higher. You can see the last time it pointed higher, it did in fact go higher by quite a bit. And now the PPS indicator isn't perfect. You can see it kind of got chopped around in here, but when it does work, you can see it works fairly well. And so you can kind of take note of that yourself. In fact, this is a beautiful one. It happened right here before this huge market sell-off. So in a matter of just a couple of days, you could have made a bag of cash if you had traded that with a put option. So that being said, let's put it all together and kind of recap quickly. We've determined that Delta is entering an uptrend. We've determined that Delta DAL is moving averages suggest an uptrend. The Delta PPS is suggesting an uptrend. The S&P 500 also suggests an uptrend, and the VIX suggests a downtrend. Remember, the VIX moves opposite the S&P 500. So with this information, I would decide to place a trade on Delta February the 16th, 2016. Now that we have the tools and we've kind of put all this together, we've gone through the videos at 17 minutes now. We've gone through a lot of information only to determine these 5 things. But these 5 things are kind of the secret to us being successful. How can I drown out the noise and make profitable decisions? So next we're going to get into selecting the right option trade. If you have any questions, feel free to reach me on optionboxer.com. Thanks for watching.